Video script 4, the global connection. Does India's market follow the US? In our last chapter, we revealed the bathtub secret that explains the Indian market's internal behavior. Now we ask the great external question. Is Dalal Street simply a small gear, forced to turn in whichever direction the great gear of Wall Street moves? Or does it have an engine of its own? Before we can compare the two, we have to understand a hidden filter that affects all international investors: currency. When you invest in a US-listed India ETF, your return is a blend of the Indian stock's performance and the rupee to dollar exchange rate. A falling rupee can create a phantom bear market that doesn't exist locally. A rising rupee can amplify your gains. To see the true picture, we must be aware of this filter. Now, let's compare their DNA at key moments in history. First, the 2020 COVID crash. As you can see, in a moment of pure global fear, all correlations go to 1. Both markets moved in perfect sync. But now look at 2018. While the US market was relatively stable, India was battling a severe domestic liquidity crisis. This was a period of dramatic decoupling. India's powerful domestic engine, driven by local credit conditions, created its own bear market, completely independent of Wall Street. Our data clearly shows the SMINETF losing over 60% of its value during this local-driven crisis. Then in 2022, the story was global inflation and rising interest rates. Once again, it was a global story, and both markets entered a sustained bear cycle together. This confirms our dual-engine theory. India is not a simple passenger. It is a powerful vehicle with a dual-engine system. It has a global engine for systemic shocks, but also a powerful domestic engine that can sometimes override global trends entirely. The lesson is clear. To truly understand the Indian market, you must watch for signals from both Washington and Mumbai. Now that we understand the structure and the global context, it's time to look at the headlines. In our next video, we will compare the news narratives to our data. Context is everything. Structure is truth. Demand ratio is the force behind the market. Remember, this content is for educational purposes only and not financial advice. Past performance does not guarantee future results, and investing involves risk.